equities today. Let's turn our attention now to Cholamandalam Investment and Finance Company. It reported earnings last week and joining us now is Arul Selvan, Executive Vice President and CFO at the company on the phone line from Chennai. Thank you very much for joining us here on NDTV Profit. This is Manvi here in the Delhi studio. First up, describe what the quarters looked like through your lens.
Thanks, Manvi. This quarter, we delivered a profit of around 171 crores after tax, which is a growth of around 42% over the previous year, same quarter. And for the first half, we had a growth of 46% over the previous year. Our disbursement had a healthy growth of around 21%, primarily on the CV front. And we, as you must be aware, we have got almost 70% of our book on the CV, commercial vehicles, and around 28% on the LAP, which is a loan against property. The rest are comprising of very small segments.
Okay, so let's talk about disbursements a little more. Yes, you've alluded to the fact that there were strong disbursements under the vehicle finance, more specifically CV. Was there a particular segment within that? I understand light commercial vehicle segments, the demand there for loans was strong.
Yes, the light commercial vehicles have grown well. We have also grown on the tractors front, and we are doing a growth on two-wheelers, albeit it's a very small pace, so the growth up there is very high. And in absolute terms, it may not be significantly making a big difference. But that's a portfolio we are consciously growing in the coming quarters.
Under the vehicle finance segment, I mean, will you be able to maintain this trajectory for H2, or is that a tough ask?
Currently, it looks like we can maintain, but it also depends to some extent on the industry, how it pans out, because we are not going to go too far away from where the industry is growing. But the industry, especially from the lights and mini lights, we see the growth coming, especially with good monsoons and the consumption side increasing in the coming quarters.
And loans against property, paint the picture there, specifically in this quarter and what it's looking like for the rest of the year?
See, we had a 17% growth in the current quarter. We expect to maintain around 15 to 17% growth. There is a bit of a high level of competition, and some of the competition is playing on providing higher loan to value, which we currently hold at around 50%. We don't intend to move it up because in this portfolio we see it as a risk to increase this loan to value proportion beyond 50-55%. So to that extent, if there are some amount of sacrifices on the disbursements, we may have to take it.
Okay, and I can extend that to suggest that you're really focusing on your NPAs. In Q2, it's the GNPA coming in at 3.5%, and that's an improvement over the previous quarter. What's really happening on the NPA front?
We have had a very good run in reducing our NPAs, especially in the vehicle finance portfolio, where we have moved it down from 3.49% last quarter to 3.26% this quarter. We had a bit of a setback in home equity because we had increased it marginally. But that is something with the help of SARFAESI that has now been extended to Chola, to NBFCs, we are confident of bringing it down in the next 2 quarters. So we expect the gross NPAs to further come down in the coming quarters, especially in vehicle finance and also in HE, but with a little bit of a lag.
Okay. Can you share some numbers that indicate where you'd like to be for the full year? I'd leave it to you to pick the number that best represents your guidance for the fiscal.
I think it is a little bit of a, ask on these numbers per se, but as I said, we will certainly be bringing it down. Maybe we are targeting somewhere in the range of around 3%, but we need to see. But one word of caution is we may also have to look at whether we are moving to 90 DPD, that is the 90 days benchmark, which RBI wants us to move to by end of next year. But we will be moving ahead, but I'm not sure whether we will do it in this year or next year. But if we move in this year, then the gross NPA numbers may move up because we are moving, 1 month of the gross NPA numbers.
Okay, so what's the current thinking? Likely to happen this year?
That is, see, we have already provided for that number, for the impact of that movement, we have already provided in our P&L. But only it is reporting the gross NPA assets as 120 or 90 is what we are trying to differ, because from a reporting perspective, when industry keeps reporting 150 days, 120 days and 190 days with different players opting for different levels, until it all becomes mandatory by end of FY18. We don't want to be seen too far away from where the industry right now operates. So we will wait for how the industry is taking a call to move ahead or move along with RBI requirements, and will follow suit.
Finally, one risk on the horizon for the vehicle finance business and one on the loans against property segment. If I request you to flag one off in each category, what would you pick?
See, on the vehicle finance business, I would say that with a lot of new players coming in, there is a bit of an pressure on good people being, poached by the new players. So there's an attrition risk that may happen, but we are gearing up to address that. On the home equity front, yes, we need to get this act on the surface together and get the gross NPA numbers pushed down to what it used to be in pre this level of NPAs that has gone up a bit in HE.
Arul Selvan, thank you very much for joining us this afternoon on NDTV. Good talking to you, and all the best. Of course, we will be speaking as each set of earnings comes out, but all the best for the second half of the year.
Thanks, Manvi. Thank you.
After the break, Sandeep Kishore, CEO and Managing Director of Zen